As we enter January 2026, NVIDIA remains the most compelling growth story in the global market, presenting a rare generational buy opportunity. The current price action reflects a stock that is consolidating its massive gains from 2025. Yet the underlying fundamentals suggest that a breakout is imminent. I don't want you guys to miss this opportunity. The primary catalyst is a staggering supply and demand imbalance. A demand for NVIDIA's AI infrastructure continues to outpace production capacity significantly. I don't want any of you guys to miss this opportunity. I spend every single day looking for opportunities and trying to help you and guide you because I enjoy helping people. It's how I help my students at Discord. Every single day, I am committed to helping people just like you grow your portfolios and find the best investments and opportunities and news to bring to you. Reports indicate that NVIDIA is strategically cutting consumer GPU supply by 30 to 40% to reallocate scarce GDDR7 memory and manufacturing slots to its high-margin Blackwell and Rubin AI chips. With the next generation Rubin architecture slated for a 2026 launch, analysts predict that this supply crunch will maintain extreme pricing power, likely driving the share price towards new all-time highs as the scarcity premium takes hold. Financially, NVIDIA is not just beating expectations, it is redefining the scale of corporate profitability. In its most recent Q3 fiscal 2026 report, the company posted record revenue of $57 billion, which is a 62% increase year over year, with non-GAAP earnings per share EPS hitting $1.30. Even more impressive is the forward guidance for Q4, where management projects revenue to climb to $65 billion, representing a 65% jump from the previous year. This trajectory is fueled by a near-term total monopoly in the AI accelerator market, where NVIDIA maintains an estimated 85 to 90% share. The company's visibility into approximately $500 billion in revenue from its Blackwell and Rubin performance through the end of 2026 underscores its ironclad control over the silicon powers the intelligence age. The consensus on Wall Street is overwhelmingly bullish, with NVIDIA maintaining a strong buy rating from the vast majority of analysts covering the stock. Major institutions like Morgan Stanley, Bank of America, and Truist have recently issued upgrades or maintained overweight ratings, citing the company's ability to sustain gross margins in the mid 70% range. While the median price target currently sits around $250 to $256, several high-end estimates from top-tier firms like Tigress Financial have set targets as high as $350 plus. These analysts point to the Rubin roadmap and the expansion of the NVIDIA AI enterprise software suite as secondary moats that will force upward revisions to earnings models throughout the year. NVIDIA's strength lies in its transition from hardware designer to the natural monopoly of AI infrastructure. You see, while traditional insider buying is less frequent at these valuations, the company conviction is reflected in its massive share repurchase program, with over $62.2 billion still authorized for buybacks as early as 2026. This aggressive return of capital, combined with a 15,000% return over the last decade, signals that the leadership believes that the stock remains undervalued relative to its future earnings power. As the great decoupling of the AI industry begins, NVIDIA's integrated software and hardware stack remains the gold standard, making it high conviction play for the investors looking to capitalize on market leg of the technology revolution. We also have to look at the street high and major bull case for target prices. Tigress Financial Partners recently upgraded NVIDIA to a $350 price target, citing that NVIDIA is the premier AI investment with pure dominance in the full stack data center leadership. FineSeth points to the accelerating adoption of the Blackwell platform and the underappreciated multi-billion-dollar opportunity in the healthcare biodigital vertical as key drivers for the next leg up. Bank of America Securities has reiterated a buy with a price target raised to $275, and they highlight that the demand visibility now extends through the calendar year of 2027. Araya notes that the Rubin architecture, scheduled for late 26 or late 27, is already seeing pre-order interest from hyperscalers, creating a seamless revenue bridge after the Blackwell cycle. Truist Securities also raised their target price on NVIDIA to $275 as well, emphasizing the supply chain improvements, allowing for better volume ramp. Steen argues that the market's still underestimating the pricing power that NVIDIA holds, specifically regarding the Blackwell Ultra chips, which carry significantly higher gross margins. margins. We also have Bernstein, which has an outperform rating that they maintained only a week ago with a new price target of $275, focusing on the normalization of AI capex, arguing that what bears call an AI bubble is actually a long-term infrastructure replacement cycle similar to the build-out of the internet that is only in the third inning. We also have Baird's Tristan Guerra, who has a target raised this past week as well to $275, pointing out that the consumer GPU supply cut 30-40% reduction as a bullish signal for margins, as it confirms NVIDIA is prioritizing its most profitable data center wafers over lower margin gaming cards. Now, this will come as a surprise to gamers like myself, of course, who enjoy video games and enjoy their video cards, but this is also very strong for people who invest in NVIDIA. We also have Morgan Stanley, who has an overweight target price adjustment in the last 30 days to $250. They remain constructive on the shortage narrative, noting that Blackwell chips are effectively sold out for the next 12 months. Moore, over at Morgan Stanley, sees the $65 billion in revenue guidance for Q4 as a floor, not a ceiling. Stifel's Ruben Roy has a price target in the last few days updated to $250, highlighting the software moat NVIDIA AI Enterprise, which is beginning to contribute meaningfully to the recurring revenue, dampening the cyclical risks that worry some investors. We also have Kevin Cassidy at Rosenblatt Securities, who had a target raise on NVIDIA to $245, continuing strong demand for AI compute from government entities and sovereign AI clouds, which is a new and rapidly growing customer tier outside of the traditional US tech giants. Now, I go over a lot of these things with my students in Discord. My goal here is to help you guys understand NVIDIA so this way you won't miss an opportunity, because my goal when I set out to create this YouTube channel and to coach people was to help people just like you grow their portfolios, become more knowledgeable in the stock market, and to help you live a better life. It's what drives me every single day. Just like helping my students in Discord, it is what I love to do. So I don't want you guys to miss out on something that could be life-changing like NVIDIA. So if you guys are enjoying this video and you enjoy the knowledge I'm presenting and you want more knowledge and you want to grow your portfolio, I would love to help you at any time when you're ready, fam. The link is in the information box below. Let's get back to NVIDIA. The key catalyst here with NVIDIA and their Q4 earnings call, which is expected very soon in February 2026, is expected to confirm the Rubin roadmap, which analysts believe will be the trigger for the next wave of price target revisions toward the 300 plus level, meaning you don't want to get in after this fact. You want to try to get in prior to February. That's really what this is all about. NVIDIA's market supremacy is currently enforced by the Blackwell architecture, a silicon beast that has monopolized the data center with a backlog stretching deep into 2027, effectively rendering competitors irrelevant in the high-performance tier. This financial fortress is being unexpectedly fortified by the Chinese market, where a new regulatory framework has unleashed a surge of H200 orders to hyperscalers like ByteDance, effectively reopening a multi-billion-dollar revenue pipe that Wall Street had previously written off. Yet the true checkmate lies in the upcoming Rubin R100 platform. Launching in late 2026 with unprecedented memory bandwidth, it is the linchpin in the roadmap that provides management visibility into a staggering $500 billion in combined revenue, ensuring that NVIDIA remains the undisputed, exorbitant toll booth for the entire AI economy. You don't want to miss this opportunity, but there are risks with every investment. So let's take a quick look at the charts, and I'll explain to you guys on a chart and in detail what the company looks like, its balance sheet, and we're going to go over some details. Let's get started. I really want you guys to understand the opportunity here, and I don't want you to miss out on it. It's what I set out to do on YouTube, and my coaching was to help as many people as I could. So I want to break this down for you the best way I can for you guys to understand the opportunity here, so you have a chance to get into something that could be absolutely massive over the next few years, and almost surely based on everything I've already explained to you. When you look at NVIDIA, there's always going to be consolidating periods on stocks that have such amazing growth, especially ones like NVIDIA. You can see there's a big bump in growth here in January of 24, cools off, runs again. There's a cool off phase, and then it runs again. Now we're in this cool off phase. And when you look at these, not every piece of history is going to repeat itself 100%, but when you look at this consolidation phase of June of 24 to May of 25, there's about 10 to 11 months of consolidation. We started this consolidation trend in July, so we're only about 5 or 6 months into this. Not quite 6 months. We still got a couple more weeks to go. By earnings will be well over 6 months. So as you can see, as we get into March and April, you would think that based off of the current growth, it would do something similar and we would get something like this. If you look at the landscape of the stock, just based off price action, we come up, consolidate, come up, consolidate, come up, consolidate, a dip here, which was part of the crash last year. So if we don't count that, then the consolidation would have stayed here. So we would have had consolidation from October to June, which is about 8 months, 7.5 to 8 months, which we're about 5 months right now. So we might see a little bit of a dip back down to 175 and then she runs, or it just consolidates and then runs. But either way, when you look at the way this stock moves based off of its moat, based off of its growth, based off EPS, earnings, revenue, the monopoly that they hold over the market, and the way Nvidia just sits there with the supply and demand issues with massive price control and the ability to sell out months, if not years in advance, is very powerful opportunity when growing future guidance and a future PE or price to sales. When we look at market cap of $4.6 trillion, $4.6 trillion. I will show you here. There we go. 4.6 trillion. And we're going to divide this 4.6 trillion by the trailing 12 month. And what we're going to do is go to financials. Trailing 12 month is going to be 187 billion. And we're going to divide that by 187 billion. Price to sales of 24 is sitting exactly where it should for a stock like this. In fact, Robinhood's sitting at a 24.5 and realistically doesn't have anywhere near the pricing power or dominance in their sector that Nvidia holds. And a lot of companies will trade at forward multiples of 50 or higher. Palantir is way higher than that. And when you look at their price to earnings, it's 46. So the stock is trading on a forward-looking ratio that's somewhat modest. And Wall Street has kind of overlooked a lot of fundamentals on Nvidia, and pricing power is one of them. And not to mention China. This is a big issue. Being able to sell to China again, opening up that pipeline is huge, and it's not been priced back into the stock yet. And of course, the reopening of the pipeline to China to sell these chips yet again, that has not been guided in or included in this price. This has not been priced in at all yet. And it will after all of the tax loss harvesting and we get to this new year and this data this coming week. Nvidia will likely get priced back where it belongs, selling to China like it once was, because it's been disrupted over the past 6 months with tariff talk and a market crash and a bunch of instability over the past few months. Realistically, putting Nvidia back to the high 190s, low 200 range of around $200 to $210 as soon as the next month or two. So I'd be watching this very closely. Looking at the financials of Nvidia, their total revenue is almost 200 billion trailing 12 month, net income 100 billion, basically just about 99 billion, and their EBITDA is over 100 billion, 112 billion trailing 12 month. And when we look at their quarter growth, in 2022 they had 6 billion. In 2023 it was 18 on average. In 2024 it's 40, and now they're pushing 60. This is incredible revenue growth. And this is what matters, revenue. But what matters even more is net income, and it's also growing from 1 billion to 2 billion to 12 to 16 to 22, 26 to 31. And it will not surprise me to see these numbers, these net income numbers in the 40 and 50 or higher, as in billions, in the coming few quarters. When we go look at their balance sheet, they're sitting on $50 billion in cash, 49.7, 49.8 billion essentially in cash. And they have enough